Berkshire Hathaway stock has been buffeted recently. It's down about 20% since the beginning of the year. Does this turn the stock of the ultimate value investor into a value in and of itself? Buffett watcher Andrew Kilpatrick is author of Permanent Value. He's also a broker at Wachovia. And our guest host, Whitney Tilson, is also an avid Buffett watcher, joining us to talk about what to do with this stock. And Andrew, I guess, you look at what he holds, and so much of it related to housing, not a surprise that he's going to have some weakness in this time period, right?
Carl, that's exactly right. Berkshire has had a tough year, as has everybody. He does have paint and insulation and carpet. Those are obviously hit. There are some strong segments. I would think energy would be well. Insurance is weak. Maybe Geico is strong. So it's a mixed bag. It's definitely a tough year, but a time, I think, for value investors to take a look. And Buffett is.
Can you blame it on just the weak economy and the circumstances that all companies find themselves in, or has he made some strategic errors in and along the way the past 10 years?
I think it's more of a broad thing of the general economy. I mean, he's still got great brand name companies. Coke and American Express will do better. They're having tough years. Well, he owns banks, but he owns Wells Fargo, which is a AAA credit. And Buffett brought us through 73 and 74 and the year 2000. He's got a lot of cash. He's got a AAA credit. He has done this before, and he may not have a great year, but he will wind up doing better than most because of the strength of the balance sheet, really.
Yeah, he's made some pretty good moves in fixed income, currencies, energy, obviously.
Fixed income important.
Right. Whitney,
right, Carl.
Is this, I mean, I assume you're a buyer at these prices?
We are. It's one of our largest positions, and we think it's just the kind of thing you want to own in a chaotic environment. And I think what people are missing is that if you look out over the next 12 months, Andy's points are exactly right. Some of his stocks are weak. The Berkshire, much more than anything, is an insurance business. Insurance pricing is soft, so there are short-term headwinds. What people are missing is though that weak and chaotic environments are wonderful for Warren Buffett, and his biggest problem is he's sitting on so much cash and liquidity, he needs to put it to work, and the odds of doing a transformative deal have really gone up substantially.
And define what that would be. What would a transformative deal look like for Buffett?
Well, what I would personally love to see is something like him buy American Express outright.
Really?
He owns
so doubling down on the consumer, in other words.
He owns 13% of the company already. He has a long history going back to the salad oil scandal in 1963 with Amex. The company's got a market cap today of $42 billion. He could buy it in a heartbeat. He could pay $50 billion for it in a heartbeat. He has that kind of liquidity. I'm not predicting it. I don't think it's likely. The problem is if he were to bid $50 billion, the stock would immediately go up to that point, and he'd sort of, the fact that he was bidding for it would make everyone else see how cheap it is. We own American Express. We've been buying it, and my guess is if Buffett thought he could get the deal done, he would buy the whole thing today at $50 billion.
Andrew, what do you think of that? And I guess it points to the question why people buy Berkshire at all. I mean, you can go out and buy American Express, but you're still, I mean, to buy Berkshire, you're paying for not only Buffett's wisdom and experience, but the $35 billion in cash and the idea that he might do something big, right?
I agree, and I agree with Whitney on that American Express is a possibility. Just like Whitney said, not that it's going to happen, but he owns a big chunk. That piece would go up. He would cut out the annual reports, and it would be privately held. That's one possibility. I think that kind of thing, or a big energy buy, and I think he's doing a lot of work in the fixed income side. They're big things that could happen, and he could do a lot of small things. But American Express is certainly one idea.
Yeah, well, interesting thing too. He got out of Freddie in 2000,
right.
And it's hard to remember and see. It's easy to point to the mistakes or the things that are hurting the stock, but there's also something to be said, Andrew, for the mistakes that he didn't make, the pitfalls he avoided. Don't you think?
Right. He did get out of Freddie Mac way back and said he saw something going. And Buffett has made some mistakes. He bought Berkshire Hathaway. That was a mistake because it went under as an old textile mill. He's made his mistakes, but the mistakes are usually fairly small, and he's had some winners. It's a tough year all around. There's no question about that. But he, with all the cash and all that, he will find something to counterbalance this year's weakness.
And he's admitted as such. You think intrinsic value for, is it the Class A shares? You think it's 157?
That's our sort of based on normalized earnings, maybe a little lower this year, but we're looking at Berkshire as something we've owned for almost 10 years now, and we suspect we'll own it for another 10 years.
Yeah. A lot of people have done very well with it over that period. Andrew, thank you very much. Good to talk to you. Of course, Whitney's here for the rest of the show. We also have a website dedicated to Buffett's latest moves. Just log on to BuffettWatch.cnbc.com.